Well, a warm welcome to you again. Well, President Muhammadu Buhari has named a new management for the Nigerian Securities Printing and Minting Company. Those appointed includes Abbas Masanawa as Managing Director and Abdullahi Minijibir, Chris Arewa and Tunji Kazim as Executive Directors. The appointment followed the memo sent to the President by the Governor of the Central Bank of Nigeria, Godwin Emefiele. The new management are to take office with immediate effect. Again, the Central Bank and the Financial Control Authority of the United Kingdom have agreed to explore ways to develop regulations for the emerging financial technology space in Nigeria. The Central Bank's Governor Godwin Emefiele said the extremely changing face of financial services comes with an urgent need to regulators to catch up if fintech is to attain its maximum potentials in Nigeria. There are currently no single framework that is for fintech services in the country. A financial analyst Olufemi Awoyemi says the Nigerian economic growth remains fragile. He says this trend is expected as Nigeria moves towards an election year. He made this position while reacting to the GDP figures released last week by the NBS.
If you understand, we're going into a political season. These things run in cycles. So for someone like me, it should be expected. I know the data, and that's what I do with the data. It's to be expected. And the tendency is that because we're in a political season, it takes a different dimension. That is true. The second part of it is that it is actually true that there should be reasons for concern because businesses are facing some severe cash flow crisis. They're not growing in terms of growing numbers of employees, in terms of recruiting and growing much more. The areas of growth which we saw before, like agriculture, hasn't been able to, but then you would understand that it's not that season yet. So again, those numbers needs to be looked at in total, rather than looked at it in isolation. But if you want to ask that, is the economy far better than where it is? No, it is not. But then there's reason for concern, but it's not like the roof is entirely falling on anybody's head.
The outflow of foreign portfolio investments from the Nigerian economy has resulted in a decline in the country's foreign reserves. Economic watchers are of the opinion that the trend may not end soon as the country prepares for general elections next year, 2019. Reports had shown that increasing outflows by foreign portfolio investors is taking its toll on Nigeria's external reserves, which fell to $47.4 billion. The figure represented a decline of $411 million. Similarly, the level of outflow negatively impacted the country's stock market. According to the Nigerian Stock Exchange, there is a decrease of nearly 3.4% in foreign inflows in the last 3 months. Some market analysts link the rise in foreign outflows to recent rise in global bond yields in the U.S., which has fueled sell-off in emerging and frontier markets. They added that this is not the time for the central bank to make panicking measures and increase rates, stressing that increasing rates will not arrest the current political risk. Well, joining me in the studio to dissect this topic is the head of research at AfriInvest, Robert Omotunde. Thank you very much, Robert, for joining us on the show today.
Thank you so much.
It's great to have you have AfriInvest on a Monday.
It's my pleasure.
Let's start this way. A lot of issues has been brought up by this very important topic, talking about FPIs and its relations to foreign reserves. Let me first of all ask you, in your own terms, what do you make of the decline we've experienced in our reserves for just this little time?
Well, we think that the decline is not significant enough to the point where we start to get so worried. What is worrying is the fact that we are at a level where, I mean, very positive steps need to be taken if you're not going to see further decline. But again, it's most unlikely that there is nothing or the regulator has little or nothing to do, in order to stem the tide. It is what is characteristic of the election year or the year preceding the election. It's happening in February 2019. So we're talking about some few months, before the elections. It is natural that foreign investors will get, worried, especially as you see the development within the political space, cross-carpeting, allegations about the current government not, obeying the rule of law and all of those issues, are things to get investors worried. But again, when we analyze the data in terms of, those are the signals we're getting from the market, especially when you see the much of beating that the equities market has taken. But when you analyze data, say for the equities market, for example, year to date, up until July, you know that there is a lag between when the NSE releases that, that data. But what we've seen is that definitely there's been net outflow of funds, but it's just currently around 30 billion naira. Okay, not even in dollar terms. Okay. And from the report you read, you will notice that the foreign reserves decline, which you mentioned, it has not even declined by up to $1 billion naira. Yeah. Although we know that, $1 billion, although we know that there are different configurations of that reserves, beyond the proceeds from oil. A significant part of it is foreign portfolio inflow, which by far has improved significantly between the levels which we had in 2016 and what we have now. Remember that it was in April last year that the investors and exporters window was opened. Before then, 2016 was a disaster, in quote, in terms of FPI inflow. Yeah. Because we're coming from a level of around $14.9 billion in 2014, at the wake of the crash. But 2015, we still managed to, post some number. But 2015 was an utter crash, in terms of FPI inflow. But we saw that recovery in 2017, when we saw that we recorded about $7.3 billion in terms of inflow. Now, 2018 is already, generating momentum already as we speak. Year to date, we've recorded more in terms of FPI inflow, than we recorded in the whole of 2017. And it's just half year, based on the half year data. Yeah. Definitely, there's panic, on the equity side, because most investors are not taking, decision. They are taking the sideline. If you look at the data from NSE, for example, about 74% of trade as of July was done by domestic investors. 24% or thereabout came from foreign portfolio investors. Yeah. And this is the reason is because they are just trying to watch not just the political scene, because remember when this bearish momentum started in the market, it started by way of investors shifting towards a more attractive market when we saw policy normalization in systemic central banks, US Fed raised rates continuously for about 2 times, and then we saw the ECB moved. We saw the Bank of England also hiking rates, and all of these plus the run on emerging market assets, which took most investors out of most frontier markets where Nigeria belongs. So what we've seen right now, from that period of so to speak global run on emerging and frontier market assets, we're now seeing a situation that is dovetailing into Nigeria's political season, which we're already seeing. So it's like a double tragedy.
It's complicated.
Yeah, it's complicated for Nigeria.
Well, would you now say that, like many have said, that this preference for CPIs other than FDIs, I beg your pardon, other than FDIs, that's foreign portfolio investment ahead of FDIs, is that not a problem?
It is a problem. And, again, you're not going to see a correction in that. Remember, foreign direct investments are attracted when the overall investment landscape or business environment it's apt. Let's put it that way. Remember that there has been moves by the current government to ease doing business in Nigeria. When you analyze across broad spectrum power, access to electricity is key. Getting your business registered. Apart from all other structural issues, that bedevil the economy, most foreign direct investment, because, they are longer term, investment. When you're taking such decisions, you have to be sure that over the next 3, 4, 5, some of those foreign direct investments can last for decades. You want to be sure that there is consistency in terms of government policy, and the environment, generally speaking, is consistent. Security is part of it, So the reason why we are not likely going to see this, even before the current government, in the past government, we've seen that, for as far back as we can trace, there has been weak foreign direct inflow, for as far back as since 2012. you know. So, and we are not likely going to see this until we start, you know, making some strategic decisions to realign the structure, you know, of doing business in Nigeria. Now, the current government, we must give kudos to them, you know. I mean, but again, a lot still needs to be done, you know, in that regard. So what you've seen is a tilt towards foreign portfolio investment into the country than foreign direct investment. You know, if you analyze the data, you know, peak foreign direct and foreign portfolio, you know, inflow as a standalone, you know, if you back out other investment coming into Nigeria, you know, over 80% is on foreign portfolio investment, whereas foreign direct investment is just getting, you know, a minuscule. And again, if you look at that data on a holistic basis, other investment coming from by way of loans, you know, or some of these Eurobonds issuance, you know, that we're getting make up the bulk of it. So when you look at the data holistically, while FPI is doing somewhat around 55 to 60%, you know, loans are doing close to 25 to, you know, 30%, and then foreign direct investment is barely doing 10%. You know, so it's something that the government really needs to look at. And until we get that addressed, you're going to see this volatility. You know, we can argue now that the monetary policy.
Yeah, you keep talking about the monetary, you know, and the fiscal
side
aligning.
But I'm even saying that the current alignment of monetary policy is towards protecting the foreign exchange rates, so to speak, you know. And what you see, why that is very critical at this time is because of the volatility nature of most foreign portfolio inflow, you know. Right now, what we are not seeing a stop, you know. We've only seen sort of a drawback in terms of inflow, you know. And the current one that we have, where we are recording some outflow, we're also getting inflow. Net, it's still negative, you know, but it's not as significant yet. So we are still likely going to see much of that pressure come when the election, the election is getting closer.
This is going to continue till that time?
Well, we are likely going to see that.
You know, there's going to be an effect, of course, on fundamentals, inflation rate, which has been on the downward trend for months. So all the effects, let's look at it. Even the GDP figures I was just read out last week, 1.50%. Are we not going to have this one way or the other?
Well, you know, because as we speak, you know, we have an economy that is largely tilted more towards consumption, and consumption, you know, drives the bulk of our GDP, you know, which is why you're still seeing the level of growth we are witnessing now. It is weak, no doubt, and this is because consumer spending power, you know, is continuously getting weaker because of high inflationary environment, again, which is tied to whatever happened within the foreign exchange space, you know. So these issues definitely will connect, you know, in terms of inflation, in terms of weak growth, and in terms of, you know, so many other area of the macroeconomy, you know, in analyzing the impact that is going to have, you know, on the economy. But it must be said that there's need for collaboration, like you mentioned, in terms of fiscal policy and monetary policy, you know, in getting some of these issues resolved, you know. But in the near term, we believe that as we move towards the election, the central bank is still holding tight to its control, you know, in terms of how the foreign exchange is managed, you know. And to that extent, coupled with the fact that we've not seen a major drop, and we are not likely to see a major drop in global oil prices, you know, we expect that will cushion whatever effect, you know, the speed of outflow will have, you know, on exchange rate. So to the extent that the exchange rate is stable, you know, we don't expect much deterioration in other macroeconomic fundamentals.
Because that is really very sensitive. Now, investors are driven by security of their investments and, of course, returns. Now, the MPC members are obviously aware of this. What are you thinking? Because, you know, I know you've touched it, but what are you really thinking? As we move ahead, they're going to be having their meeting, I think, on the 23rd. Some are saying there could be an increase, maybe a rise in interest rate. Well,
it's noteworthy that some members of the committee, you know, I mean, as at the last meeting, in the May meeting, we had only one member calling for a hike. But at the last meeting, the one held in July, we saw 2 members, you know, actually calling for a hike, you know. And this is stemming from what is happening within the global space. The fact that most systemic central banks, you know, environments that are not as volatile as emerging, market environments like ours, we see them hiking rates. So naturally, like you mentioned, because security is key, most funds we just want to move, and tilt towards such markets, especially when you ride the yield curve, in those environments where there are much investable opportunity, unlike what we have here, But again, we think that hiking interest rate, that's the benchmark rate now, may not be the appropriate thing for the committee to do. Already, you're at 14%. Most market rates, are below that level. Again, the central bank has a tool for influencing whatever they want the market rate to be, and that they can always achieve through the OMO rate, the clearing rate, or the treasury bill marginal rate. To that extent, the central bank may likely, stick to that, while the committee will most likely maintain status quo by keeping MPR at 14%.
Now, the price of crude too looks promising, and many believe that maybe with the diplomatic face-off between United States and Iran, maybe there could be sanctions, and maybe the price of crude could go higher. I don't know if you're thinking.
Well, that's a possibility, especially given the several trade restrictions and trade wars, and apart from other geopolitical tensions that may also warrant some restrictions being placed. The possibility is that we may have a better crude oil price from the level that we have now. But even if it gets worse and we maintain the current level, I think fiscally we'll still be fine, in terms of projection. Look at the budget. What the budget envisaged is still significantly below the current, market price. So, I mean, from the external perspective, there is really nothing, or there is not so much to be particularly bothered about. More so that we've seen stability, I mean, it's over a year now that we've seen relative stability in global oil prices.
As we look at this now, rounding this up now, we're moving ahead. We're still going to move to the election year, and the election will come and go. What policies? We're talking about policy. We're talking about policies that we need to strengthen and stabilize this economy. A lot of spending is going on. When will it trickle? When will it move the man on the street?
Well, I think one thing that the current government needs to, really focus attention on is impact spending. When we say impact spending, we're not necessarily talking about increasing recurrent expenditure. If you look at the budget line and most of the spending, I mean, we're talking about a 9.1 trillion naira budget to be, expended this year. That's, for us, it's very ambitious. We call it a wishful budget, in fact, because the revenue fundamentals of government, including their borrowing capacity, may not support that sort of spending. But even if we have to spend so much, it's better if it's targeted at infrastructure. Look at the case of power that we often talked about. When you fix power in a country like Nigeria, you have fixed several other problems, that are tied to power. So I mean, those sort of spending, if you fix the congestion at Apapa Port, for example, you are implicitly solving several other issues. That spending directly about 1 trillion naira on social intervention, as this government believes in, will not achieve. So impact spending, it's something that this government should consider, and we believe that it will help in, reflating the economy, because we are the level of growth that we're experiencing now is abysmal. At 1.5%, this is an economy whose long-term growth rate, has been consistently above 6% before the crash.
Robert Omotude, I know you can go on and on. Thank you very much for putting this into perspective for us and viewers to actually enjoy today, Monday. Thank you again for joining us on Business Nigeria.
Thank you.
Well, we'll take a break, and when we return, of course, we have more for you. Stay with us. It's Business Nigeria. Ekop, can you hear me?
I can hear you.
Ekop,
Yes. I can hear you.
how are you?
I'm cool, man. Though I can do better with your
You can do better.
support and assistance.
So how did the market close finally?
It was 0.03%. So it was a reverse after that.
Thank you for staying with us. Let's move straight to the floor of the Nigerian Stock Exchange for details of today's proceedings. Effiong Ekop, TVC News business editor, takes it away from me now.
Good afternoon, Tolu. The market closed in the negative territory, but it wasn't as deep as what we had seen in the mid-trade. So many of the high-cap stocks were able to reverse the negative trend. And so we had minor and relatively manageable debt of 0.03% of the practice of index. Let me turn to David Adonre, who is a security trader from Highcap Securities Limited. Welcome.
Thank you very much. Good afternoon.
During mid-trade at about 1:30, many of you were so worked up that the market was dipping close to 3%. Thank God it's reversed from what we now see 0.03%. How did this happen? Which companies were able to come up with the reverse?
Yeah, thank you. Just like you mentioned, up till mid-afternoon, there were fears in the market that perhaps the trend of the recent past was about to be replicated today, until there was a dramatic recovery in the price of a major security, Dangote Cement. And so that was what reversed the negative trend in the market, such that at the end of trading, the market was almost flat.
I know that as at that time, 1:30, Dangote lost about 8% and about, I think, 6 or 7 naira from price level. So how much did it bring back to the trading floor to do the correction? I mean, Dangote
Yes,
Cement.
it was almost gaining 3%, 2-point-something%. And at that time, the market itself was down by about 2-point-something%. And so the recovery of Dangote Cement wiped out that negative position and brought the market to a level of almost stability.
We so respect Dangote Cement. This time it comes to the trading floor. Let's know, what is this stock, its position, on the floor?
No, in terms of its contribution to the capitalization of the market, Dangote Cement is overwhelming. More than 30% of the market cap is actually contributed by Dangote. And so if other stocks are not being traded on a day, and Dangote makes a movement, either up or down, it has an overwhelming influence on how the market ends.
In spite of recovery by high-cap stocks, Giants Bank took a loss of more than 10% on the floor. Why did it happen that way?
Now that should be ascribed to forces of supply and demand. Perhaps a lot of people wanted to exit Jais Bank for reasons that are not very, very clear yet. But that notwithstanding, I think the forces of supply and demand.
Would you say it was the same thing that happened to flour mills? I mean, demand and supply interaction?
Yes, demand and supply interaction, because flour mill is a big company that has consistently performed. And so, so many things are putting extra pressure on a number of stocks, especially those that are widely held. school fees are there to be paid now, and people have just come back from Salah holiday. So there might be a lot of selling pressure for some of these big stocks.
Many thanks. Let's leave it there. Thank you very much for coming. Yeah. David Adonre, dealer with High Cap Securities, talking about market close on a Monday afternoon. Back to you.
All right, thank you very much, Effiong. Up 0.03%. Well, better than what we had when we spoke earlier at 1:30 about the state of the market. Well, let's tell you that crude oil prices trade high at the international market following improved orders and buyings by major dealers in Europe. Well, at the London market, the European Brent trades at $77 per barrel. The OPEC basket crude steadies at $74 per barrel. With that is a wrap on Business Nigeria for today. Join us again in 24 hours for a fresh edition. I am Tolulope Ogunjobi. Enjoy the rest of your day.
Day. The producer, is she there? Mofe, look at after.